Hey guys, it's George David with George David Investing. Today we're going to be breaking down Coinbase IPO and also understanding how realistic it is for that 2000% upside. It's definitely there, but a lot of factors have to come into place. We're going to break that all down in the video. As always, we're also going to be breaking down the economy as a whole to understand just how realistic this bull market is and whether we're prone for another stock market and housing bubble crash in the next 6 months or 12 months, especially with the new sanctions coming in with China and Russia simultaneously. So as always, let's break it down. Okay, so in this video, we're going to be covering number one, Coinbase stock analysis and potential upside for Coinbase. Number two, today's stock market news. Number three, is it time to buy, sell, or wait? And number four, triggers for an upcoming stock market crash. So let's dive right in. Now, currently, Coinbase does $1.8 billion a year in revenue. If you take a look at the number at the Q1 level and extrapolate that out to 4 quarters. So $7.2 billion a year is approximately the current level of revenue that Coinbase is doing. Don't forget, this is an IPO. A lot of people are saying that Coinbase is unlike any other. There are some benefits, but there's also some detriments to that. With that in mind, Coinbase's maximum revenue potential when factoring in all the other competition in the industry and also highly fluctuating and varying market conditions is $50 billion a year. Now that's a little bit conservative. Some individuals might think it's going to be a little bit higher. We're going to peg that number at $50 billion a year in revenue. What that gets us is a growth potential of 594%. That's really good. That is a growth company. However, I rate the stock only an okay. Now, the reason why Coinbase is only rated an okay versus a good or an all-in, such as a Tesla or a Zillow or another company that I haven't mentioned, is despite the fact that there is a lot of growth potential of the company, there is also a lot of variation in the stock. Number one, there's other competitors in the marketplace that are very similar in what they have to offer. Although Coinbase is the leader, it's not necessarily able to completely head and shoulders beat out the competition like a Google can in terms of search engines, Tesla can in terms of just being the innovator. So there's a little bit of concern there about future revenue growth stability. On top of that, revenues are highly dependent, just like the CEO of Coinbase was explaining. They're very highly dependent on crypto's prices. So once there's variations there, there's also revenue variations. So is Coinbase a long-term play? Yes. But also in the short term, it's highly unlikely that the price is going to just continue to go up and up and up. There's going to be a lot of fluctuations. And because of that, there's other companies that not only have greater growth potential, although 594% is very good, but also stability in terms of that growth as well, instead of having to stomach massive swings. So with that in mind, is Coinbase a mass use stock? Yes, everyone can use it. You can use it. It is something that allows for a little bit less of a worry in terms of something that's completely fictitious, like an Enron coming in and what the hell are they doing? No, Coinbase is here. It's around to stay. Can it keep up with the competition is the only question. It's a company that does face a lot of competition in the industry. So moving ahead, we're going to analyze today's stock market news because, first of all, and what we'll be talking about is, it's very important to understand today's stock market news in relation to investing into Coinbase and possibly tapping into that 2,000% upside potential. Remember, revenue growth potential is the floor. So right now, 594% growth is the floor. There's always a multiplier on top of that. A company goes up 1,000%. Well, its stock price will probably go up about 2, 3, 4 times that, right? So there's definitely 2,000% upside. It is not as cut and dry as some of those other all-in entities. But let's understand what's going on in today's stock market news. Number one, We still have the corporate tax rate increases lurking. 28% is the goal. The consensus estimate is that number will be 25%, and the current number is 21%. The big news today is the Russia sanctions and Russia retaliation to the sanctions. Let's understand what that specifically entails. Now, as always, is it time to buy, sell, or wait? Now, Coinbase just came out with an IPO, but where are we in the stock market? Well, we're going to look at the stock market as a whole because there's no specific dip that has happened in Coinbase. There is not enough data. A lot of the best investments, when you take a look at Facebook or other companies that have IPO'd, are either at dip points or when enough data comes in to validate that the company is not in a dip. So Facebook, if you looked at the stock, after about 200 days, you'd see it's in a dip. It has that golden cross point, which here we're looking at the stock market as a whole, and then you get in at a nice price. Remember, getting in at the right price ensures not only downside protection, but also gets you in at the better price to ensure upside potential as well. So the stock market as a whole right now is not in a dip. We're in a waiting pattern. We need that another dip. Remember, long-term investing, patience is the game. We're not here to make a fast buck. We're trying to make a lot of bucks. And a lot of bucks happen from doing the proper due diligence and getting in at the right time. So, as I said, the technical dip right there, June 2020, just a little bit before that, that would have been the perfect moment there. We're at a waiting pattern. But wait, there's more. Let's understand this as well. It's all about getting in at the right time, as I emphasized this in the other videos. The reason why you never buy the top is because that perceived dip that you can see here in March of 2000, that looked like a nice dip. You get in there, but in reality, you would lose about 20%. Whereas if you buy at the golden cross point there in September, October of 1999, well, then you would have been able to make another 30 to 40% upside in just about over a year's time. And I don't think anyone's complaining with 30 to 40%. That's very good, and that's also a realistic amount of time to invest in. So that's why I always emphasize wait. You only buy at the golden cross point. Rule 1 of investing, don't lose money. Rule 2, don't forget about that. Now, here's the triggers, as I always emphasize. What are the triggers for a potential stock market crash? So we got a lot of things going on. But again, going back to it, it's number 1, higher interest rates, because that's slow spending. Loans go up in price, whether it's consumer or businesses. Businesses take out more expensive loans. That means that they can hire less people, spend less money. Number 2, spiking oil prices in combination with a slowing economy that comes from higher interest rates. An unusual spike in oil prices will constrain consumer spending and also business spending. Oil truly touches every single portion of the economy. It's not just how much you're spending in terms of household fuel for your car or your home in terms of heating and cooling, but it's also the manufacturing of goods and services. When oil prices start getting to very high levels and they spike, well, that percolates to every facet of the economy. Personal, business, manufacturing, the manufacturing of goods and services, the transportation of goods and services, and we have already experienced that in terms of the producer price index going up already 4% year over year in March. So that's definitely that. And then final one, a wild card scenario such as another pandemic lockdown. If another variant of COVID comes out and it's just absolutely horrendous, or another pandemic of some other origin comes out. That's always the wild card. But the 2 biggest triggers we need to analyze are higher interest rates. We're not there yet, but it might happen earlier than expected, as I mentioned in the previous video, with inflationary pressures coming into the market, and the Fed might have to intervene to cool down inflation if that inflation level goes well above the target. And obviously, of course, spiking oil prices. Now, you guys, we're tying this all together into the 2,000% upside potential for Coinbase, and to understand if there's a potential stock market crash that's coming up as well. Remember the spiking oil prices. We're going to touch upon that in just a second. Here's where it's very important. The Russia sanctions don't really do much. We don't really do much business with Russia in general. This is more of a problem if you have trade wars. China versus the US. Well, there you have companies, big tech companies like Apple and other entities like Microsoft that do a lot of business with China. So there could be some tick for tat in terms of pressures when there's a trade war. But a trade war with Russia isn't too bad because we don't do much business with Russia. The problem is that Russia is a major oil supplier. And this only becomes tangible if oil supply is cut to Europe and other places like China as a retaliation from Russia. This is when things get interesting. So if Russia does that, then we got to watch the oil prices very carefully because that can start percolating down into our economy and causing consumer spending. Again, why are we all talking about this? Why are we wrapping this into the upside potential? Well, if your consumer spending goes down, that's less people that are using their extra discretionary income to put their dollars into Coinbase to transfer into other cryptocurrencies. So again, there's not much problems if Russia imposes sanctions on us and us with Russia. It only becomes a problem if they start cutting oil supply, which increases prices of oil and spending in Europe and other trade partners of us, and that percolates back to our economy. Again, corporate tax rate increases. You can pretty much pencil in a nice correction. A dip will come in. That dip would be a perfect opportunity to get into Coinbase, but that's only a quick dip because of lower earnings. Obviously, that tangibly affects stock prices, rejiggers them a little bit, and then ultimately the market will rebound right away after that because higher corporate tax rates within reason, 21% going up to 25%, won't truly impact GDP. It's just a line item essentially on the income statement where earnings go down. And then the market adjusts and it realizes that this hasn't impacted GDP and the market continues to spend and grow. So as always, if you really enjoyed this video and you want more content, give me the confidence, give me a little bit of boost here and smash, destroy, hit that like button as if your portfolio depended upon it. And as always, if you haven't done so already, please subscribe to the channel. It will help me give out more information in a timely manner to more people by growing the channel. As always, I will see you guys on the next video.